Hello and welcome to episode 5 of the Energy Market Updates. Let's get straight into it. Last week's major news: prices have stayed sideways at all-time highs. The US Federal Reserve announced that there will be interest rate rises till 2023, and oil crashed with US employment figures worse than expected. Power and gas for October or winter 21 start dates have maintained their levels at all-time highs due to ongoing maintenance on the gas network. Monday the 14th saw power reach £86 a megawatt hour and has stayed in the high 80s for the whole week, while gas prices have maintained 75 to 79 pence per therm or 2.5 to 2.7 pence per kilowatt hour all week for the same period. On Wednesday 16th of June, the US Federal Reserve stated that it will maintain its interest rates close to zero, but expects to have 2 rate increases by 2023. The increase in interest rates caused global commodity prices to fall. Higher interest rates are a way to curb inflation and rein in commodity prices that have spiraled to all-time highs these last few months. The day after the Fed announcement, US employment was worse than expected. This sent the price of Brent crude from its 2-year high of $75 to $72 in less than a day. Oil prices are expected to stay around $70 to $75 for the rest of the year, according to the trading houses of Vitol and Trafigura. This is based on the tightening supply dictated by OPEC and increasing demand due to lockdowns easing. Gas prices fell with oil prices on this news as well. Looking ahead to this week, maintenance enters its final week, lack of LNG, and colder weather expected. Maintenance at the Forties pipeline system has curbed nearly half of UKCS production since the 25th of May. INEOS, who owns the FPS, reports that all works have been progressed on plan and the FPS should restart from the 19th of June, meaning that we should see gradual return of flows into the impacted terminals. However, production into Bacton Seal will continue to be impacted by maintenance till the 28th of June. We expect Norwegian gas flows into northwest Europe to increase significantly after Troll and Asgard return later next week. This means gas prices should fall next week and more so on the 29th of June with the return of these supplies. Lack of LNG arrivals into the UK is adding pressure onto the gas prices this summer. The lack of LNG has hindered our ability to top up our gas storage. The UK gas storage is currently at 26% full, and we only have 2 LNG tankers due over the next week. The lack of gas supply from LNG would usually cause prices to rise. However, we wait the impact of maintenance finishing, which should see prices fall. Temperatures are expected to fall into the teens this week, which will see demand for energy pick up. We have seen record low UK gas consumption thanks to recent heat wave. However, we are below 2020 demand levels. Couple that with increasing supply, we expect to see gas prices fall this week and next. Price outlook: gas prices are expected to slowly fall from Monday with the extra supply from UK North Sea production. However, prices will not free fall due to lower temperatures expected and the lack of LNG deliveries. Power continues to be dictated by carbon, with carbon prices refusing to go below €50 a tonne. However, power prices should follow gas prices and slowly fall with high wind generation expected next week. That's all for this week. Thanks for watching. We'll see you next time for more energy market updates.